Continuing with the discussion on simple bar charts, candlestick charts, but this we are going to do it in a bigger time frame. On Wednesday, we did it in intraday time frames. We did it in hourly chart. We also showed in 15-minute chart. On that day, if you remember, we said what are the stop losses for long positions in Nifty, stop loss for the shares like Reliance Industries, TCS. I think all of them have worked out very well. That is, if you had gone long, we should have put a stop loss below certain levels which we indicated there. So that would have really saved you, or probably would have taken profits there. And if you had been in the long, probably you could have cut off your positions and now probably wait for a lower level to go for a buy. So to a very large extent, a very simple bar chart where we illustrated that the trend identification is done primarily through higher tops and higher bottoms. Like higher tops and higher bottoms, this is an uptrend. And we also illustrated that lower top and lower bottom is a downtrend, right? But sometimes some traders, even if they get a higher bottom, they go for a long, or a lower top, they go for a short. Okay, so this depends on how they have looked at the market and how they have specialized in picking up stocks or for investment. Nevertheless, one of this is used for starting their trend identification. Then there, of course, there are so many other things which follow in a trading plan, like after the entry, then how do you look at the exit, then the money management, stop losses, all those things come. Now, the most important part of it is that make an assessment. To make an assessment, I told you that day that while trading, you should be prepared to look at to what extent tomorrow there could be a resistance or a likely support to emerge, because trading itself is a business. Okay, investment probably you can do a little more blindly in the sense you can pick up some mutual funds, ETFs, or good schemes, do an SIP. It will give you money or return over a period of time. But if you're looking for a very high return, okay, then in that case you have to be in a trading business, and the trading business has its own pitfalls as well as its advantages. For those who are successful traders, the return is enormous. For those who are failing, it can really drag down. So we need to pick up the skills, okay, and then control ourselves and do trading in certain scripts or probably in the index. So that trading means different things for different people. I told you that the time frame that you are going to choose will depend on your comfort, will depend on what psychology you have, how many trades you can afford. All these things will dictate that what type of time frame that you will choose, whether you are going to choose a 15-minute time frame or 1 hour time frame or daily or weekly or monthly. Purely this is to be dictated by each one's comfort. Now, if you look at the big investment decisions, how to use the simple charts to make some big investment decisions, we will illustrate. Now, there are 3-4 important aspects of this. One is, of course, you can use the simple bar or candlestick chart itself. Second, you can use a moving average, which also uses for trend identification and also to find support and resistance levels, which indicated in a shorter time frame that day. Then third is, of course, the Fibonacci ratios, which you can use. So this is also useful. Okay. Then, of course, now you have certain points, certain percentage. Now, for example, what we have seen in stocks generally is a fall which could be either a 5% fall, or it could be a 12% fall, or probably in the region of 23 to 25%. So most of the stocks on any deep decline probably will halt somewhere here, somewhere 20 to 23, somewhere around that. And big stocks and index probably the corrections can halt at around 12% or so. Now index will normally halt around 5 to 6%. Okay, so these are generally used along with. So along with it, you make an assessment for big investment decisions. Now, if you look at Nifty before going to the stock, what is the recent top? It is 18,600, right? Now let's look at the stock. Let's look at the index first. Nifty. So now the top is around 18,593 or 18,600 we will keep. So 18,600, suppose if it is to fall by around 5%, how much it comes? It comes to 900,000 points, right? 18,600 in anything between 5 to 6%. So 5% is 930, 6% will be something like more than 1,000. So let's keep approximately 1,000 points fall. So there's a chance that the first correction, a bigger correction, can even take this market towards the 17,600. 17,600 cannot be ruled out, and we have seen earlier also 1,100 points of correction is possible. So we will look at something like a first fall which is closer to 17,600. Okay, so this gives an indication there. Now, what happens to the bigger stocks? Bigger stocks normally can have first at 12%, then probably can even decline to 20 to 23% depending on the results. Most of the top stocks will definitely receive some important support close to this. So I'm talking about investment decisions right now today. I'm not talking about intraday time frame. And now, so these are important levels probably you need to watch for your investment decisions. Along with that, once the index or the stocks come closer to those particular levels, then you use your bar chart to find out whether it has taken support or level. So you can use your moving average, bar chart, and these percentage levels or even Fibonacci ratios to work out the investment thing. So we will now look at a combination of these things and apply that to some stocks which are now in action. So let's look at the stocks which are there right now. So we will look at some of the, now Asian Paints started falling recently, okay, in the last 1 or 2 days because of margin problems, okay. So Asian Paints. Now there is correction which is coming in Reliance Industries. There is correction coming in TCS, right. So some of these stocks now, which are top stocks, are now correcting. So what are because these stocks are definitely investable stocks, and you can look at what level you should look towards buying some of these stocks. Now we will also look at other stocks also, like now probably Tata Motors, what happened previously, okay, and we can also look at steel, Tata Steel, because now the commodity stocks are still doing very well, and then we will also look at some auto stocks like Maruti. Okay, so let's look at apply these to some of these things right now. So we will first go across to Asian Paints, which is in action, and we will use this combination of the averages. Now, when you look at it, you can use a daily time frame, weekly time frame, or a monthly time frame. So in a daily time frame, normal moving averages which are being used are the 20, 50, 100, 200. Okay, generally the stocks, if it is to be in a long-term trend, it will hold above the 200-day moving average. Okay. If there is a big fall, probably it may come to closer to 50-week moving average. Normally it will halt. The 50 moving average is closer to 200-day moving average, right? So 50-week and 200-day moving average, both are almost the same thing. Okay. Then you will have a 20-month moving average. A big problem happens, and probably a 20-week moving average. Okay, a 20-month moving average probably will be used, which could be something like a 100-week moving average or something like that, something closer to that. So we will look at a bigger time frame and see how where all, if there is a big fall, to what level of moving average and what level of Fibonacci supports the stocks have fallen. Now let's look at Asian Paints. Asian Paints, because we had picked the stock because of the recent action. Now this is a monthly chart. Okay, this is a monthly chart, and ever since 2017, if you look at the monthly chart, it has any bigger correction. If you look at even in the period of 2011, the last 10 years itself, generally speaking, the Asian Paints has not sustained itself below the magenta line. I would say it has just spiked a little lower if there is a problem, but it has always rallied. Even during the pandemic time, if you see, this is the pandemic month, and even during that period, it just spiked below the moving average and started moving up. So what does it say? It says that probably we could probably head towards the 2390 levels. 2390 levels. So if there is a bigger problem as far as the stock is concerned regarding the margin, other things, so you can look at whether we should wait till 2400. Okay, so this is for the investment decision. So a probable investment closer to this particular level can give a very high return, because if you see all the dips after that has taken itself to very substantially very high level. So this is one thing that you can probably look at it, and you can draw your Fibonacci ratios in terms of any particular pivot point high to low. So probably you can take between 2260 and 3505. So between 2260 and 3505 if you take, let's look at the Fibonacci ratio for that. So now it has come today. If you look at it, the 2865. The first support was 3190, 3014. It is 2865, then 2716. These are important next support levels. Right now, it can probably add itself down to 2715 or 2716 levels. So the important support level that we are speaking now with now, if 2865 is broken, because it has now taken support, a little bit of support today. Now, what should we do in that case? Now, for trader and for investor. Now, if you see, the investor should wait a little patiently, because here the fall is taking place and it has gone below 3 months low. It has gone really 3 to 4 months low. So, we will draw the daily chart and see. It is substantially below the 50 moving average. Now it has come, so that means any correction will go right up to this particular place, which is the 3150, 3170. Okay, any correction on the upside will get altered towards 3170 and it may have a fall. So we need to look at some sort of a stability in Asian Paints before we go for a buy. Now I told you about the levels of 12%, 23% and all in the stocks. So let's apply this. Around 3448 or 3450 was the close. So 3450 into let us say 12% correction, that comes to 3035. That's gone, right? So this is the first correction that should have happened. That is, it has gone below that. So 3170. Now, if you look at it, now it has gone. It has come to 2920. So the fall is much more than the normal correction. So let's look at the next correction, which could probably take it about 20%. So 3450 into 0.8 approximately, it comes to 2760. So 2760 is probably the next level, where 2760 or maybe 2650 or 60 levels, and we see 2716 here, right? So this is a 61.8%. So there is a very highly likely chance that probably we could head towards 2715, and if the stock, the margin, if there is no further negativity about the stock, it should all closer to 2750. Now we talked about the moving average of 20-month moving average. That's what we saw here. Let's look at the monthly chart. The monthly chart, it says that probably a bigger fall up to 2370, 2380 is possible. So we should be prepared. So if you're buying at 2715, closer to that, then what is your, how do you make the investment choice? If you do at 2715, then you should be in a position to invest a little more closer to 2350 or 2400, so that you will average everything between 2550 or so, and then on a rally you will have a substantial good profit. So what you should do is that you should look at how Asian Paints behaves around 2715, for which we will use the bar chart. Now let us say, for example, today I told you that this is one Fibonacci, this is one I think this is 2864 is one Fibonacci thing, and it has come to 2920. So probably there could be still a little more fall, and then it can take support. Now once it takes a support closer, suppose we talked about 2715 or 2720, which is a 20% fall. In this place, if the bar chart consolidates, if there is a pattern consolidation, and if it starts breaking above a particular day's high, then in that case you can definitely look towards going long. So now we should look towards Asian Paints on the sell side, because on the rise it could be a problem. So any investor who has invested a little bit and missed selling on the top can probably look towards making one exit close to 3150, 3170 if there is a bounce back, and then look towards going long again on 2730, 2740, and then add it around the 2400 levels. So that's how we make the investment decision, for which we have used our moving average, for which we used a Fibonacci, for which we have also used the this one, that is the ratios. The ratios of 20%, it's only 2730. If it is going to 2400, then it is going to be a little higher ratio that we need to use, which will be around 38.5 or one third or 38.5%. So 3450 into 0.618, that comes to 2132. So I doubt very much whether it's going to go to that extent or so. So around 2300, 2400 probably can give a lot of support to Asian Paints. So now let's look at some other stocks where we can use our thing for this one, that is the trading purpose. Now another thing that I want to highlight is that this is of course a parabolic rise. So normally if there is a correction fall, okay, now those who are on the monthly chart, probably once the correction halts, which normally happens within probably the general corrections, or no, it doesn't break much below the 3-month low. But even if it goes a little low, it doesn't normally go much below the 6-month low. So assuming that this month low is there, this is 1, 2, see 1 quarter low is there, 2 quarter low, then 1, 2, 3, 4, 5. So probably this area first support 2865, and chances that it will not break this particular one, 2505. So it could probably end around the 2715 or 2716 itself. So we need to look at this particular thing and then look towards trading. Now we can also look at this is not the pandemic low. The pandemic low is this. So we can also look at the Fibonacci ratio in terms of the pandemic low. From the pandemic low, what is it? Yeah. So 3022 is gone, so 2712. So that is where we are seeing two clustered Fibonacci support. 2712, then of course comes to 2462. Then of course comes to 2212. So we will avoid this 2212 because that is this low. So I think we should be looking towards either this low to be touched, which is 2462, or probably 2712. So what you should do is you should make your planning, which is around the 27, this particular level, this level which is the high, which is 2700, and if it goes a little lower, you should be looking at this low, which is 2484. So investment decision as far as Asian Paints is concerned should come between 2700 and 2500. Okay, buy something at 2700, buy closer to 2500. So if both happens, then probably you would have averaged at 2600, which is a substantially a good fall of more than 20% from the top, from where the rally can again start. So we have used all these combinations to show you. Otherwise, what will happen is you have to wait for a particular formation. That formation is like this, it should come. Okay, then there should be again a break of a month high. Again, you should wait for a month's high to be broken. But if you're going to wait for that, probably like this, you may lose 200 to 300 points on the upside. So that is the disadvantage of waiting for a big trend to develop before you go on the long side, which means that you have to wait for a particular month's breakout before you do go on the long side. So that is the point that has to be considered. Now we will look at some other stocks now. So we will look at, let us say, Reliance Industries. This is also a monthly chart right now, and during the pandemic time only it went down up to the 50 moving average. Otherwise, normally this also is a clustered support, which is closer to 20 month moving average, and 20-month moving average is coming closer to 1985 to 2000. So highly unlikely that probably Reliance will go much below 2000. So that we will keep it aside. Now the important support is coming, as we know, a pivot. If there is a resistance, then if it is broken, it becomes a support. So the first support on any fall should come closer to 2369 or 2370. Now let's look at the ratios. Now this is 2751. So 2751, 12% fall means 2420, and that is what we are speaking about this. This is 2370, so 2420. So the first support probably could come much above this high, which is 2274. So we could expect something of a 2420. So wait a little patiently for Reliance to drop to 2420. Now it's 2627. So we are talking about another 100 points, 200. We're talking about another 200 points of fall. 200 points of fall. And because this correction has just started close to 27.51, it's only at 26.27. Correction is only 140, 150 rupees right now, right? So I think we look at the daily chart. Yeah, so it has come to 20 moving average, and the 50 moving average itself is now closer to 24.15. So that is where probably the next support can emerge. So Reliance probably has a good chance that if of a failure right up to this. So what they should do is that if we have not come out of the script like what I told you using an hourly chart on day, because on that day, if you remember, I was telling you that if this low is broken, 50 hour this low is broken, you better come out. So that is that came 26.90. So those who have come out of Reliance at 26.90 can wait closer to 24.20. Can wait closer to 24.20 and then look towards going long. So if there is going to be a rally, then probably you will have some resistance coming back closer to 26.80, 26.90 right now, and only a further break above that probably could again turn the situation in favor of Reliance, and the correction probably we can say has got halted right now. So now we are using the Fibonacci ratio here in the daily chart and in the monthly chart, and it comes closer to the 24.20 levels where the 50 moving average is also there. So you wait a little patiently. Now it has just hugged to the 20 moving average. So if there is going to be a further break below this 20 moving average, which is 26.03, we can see a further fall towards 24.20. Okay. So those who want to who got positions in cash market or in futures can protect them. They can come out or probably ensure that they buy a put option. They buy a put option, but I'm just saying that because it depends on how much of premium and all those things. So I think it is better to look at what premium you have got for a month, whether it is worthwhile or it is worthwhile to get out of the stock and do that, because when the trend is very clear, whether you should waste your money on the extra premium that you're going to pay. So it's a clear thing that below 26.20 you come out of the stock. Okay, and wait for a 24.20 to come. 24.20 to come. So this is based on now the bar chart shows clearly that this is an inside day, and there was a big fall and further decline below this bigger fall because this pivot has been broken. You see the trend that we talked about is a lower bottom. Okay, a lower bottom in bar chart, and probably this could be if this low is broken, then this becomes a slightly higher top. Okay, lower top side. So though not very clear, but it could be considered as a lower top for practical purposes. Then in that case, the Reliance could head towards this particular level, which is the 24.20, 24.25 levels. So we need to see Reliance going above 26.90. Probably this particular low which we talked about it. So it has to go much above that for us to claim that probably we are out of the woods as far as Reliance correction is concerned. So Reliance we have shown using the monthly chart. We have also shown using the hourly chart on last Wednesday, and today we are showing this in the case of a daily chart, and in the case of a monthly chart also. Reliance normally can go right up to the 20 moving average, but that is coming out 1979 and 1980. So maybe that's not the place where probably it will come. So we have also shown I think the Fibonacci ratios if you apply. So let's look at from this particular level, which is one important low. So now you can see the first support coming closer to 25.27, which is the 23.5% retracement. Then the second support comes to 23.90. So that is what we said, 24.20 also. So I think we should see this position getting halted closer to the 23.90, because a fall below 22.78 is not visualized because that will kill the entire structure. So I think we should be looking towards a support which is closer to the 22.80 levels, not to be broken. So 23.90, I think 25.27, then 23.90 or 24.20 approximately. That will give you a very good comfortable level for us to look at from all points, because we are talking in terms of ratios, we are talking in terms of support turning resistance turning into support level. Then we have also looked at the 50-day moving average, which is giving support, and also the Fibonacci. So all these things makes it that wait till 2400, then look towards going long at around 2400. From there, probably you will get a much the correction would have been over, and from there, if this peak is going to be scaled, then you will be able to get that 15-20% return much faster. So that is as far as Reliance is concerned. We will look at Tata Consultancy Services, TCS. So TCS this month is having a big fall, and normally after the results sometimes happens. But right now the support resistance turn support is this particular level, which is the 3400. So normally we should not expect if things are okay, then we should probably get a support very shortly. That is 3498 or so it is right now. So 3400 should definitely look towards holding. Now the monthly monthly moving average and all comes to 2800. So I don't think so we should be looking right now at this, because there's nothing much negative there as far as TCS is concerned. So probably we should definitely get something of a support based on this trend line also. That is we'll look at the trend line also, which is the line. We look at it, because this has not been broken for a long time now. For the last 6 months or so, 1, 2, 3, 4, 5, 6, 7, 8, 9 months, this line has not been broken. So I think we should be looking at this line in this month, which comes to 32.35. That's also unlikely to happen. So I don't think so even 32.35 right now is on the cards. So we should be looking at something like a 3400. So let's look at the Fibonacci for this. And so we'll draw the Fibonacci from this particular level itself. So the 38.2 should have held it around 35.52. Now it has fallen below 35.52, right? So it has fallen below 35.52. So it looks as if we will get closer to 34.20. So now it is 34.98. So 34.20 should hold. I think then the next thing will come closer to 32.82. I think we should have the confidence that probably there's 34.20. So what you should do is, you should keep observing the price action as it approaches towards 34.20. So if it looks like stabilizing closer to 34.20, definitely we should look towards going long. Now look at the daily chart right now. Now the daily chart, it is clearly below the 20 and 50 moving average. So any rally will get altered closer to 3700 for the time being, and there can be a fall. So right now, let's look at TCS. If you look at the trading plan, you should be prepared for a 3400 to 3720. Okay, I think that's the range we can first expect now. So closer to 341020, look at the formation and then go for a long in TCS. Now, if it immediately goes close to 371020 levels, you can definitely see some resistance coming there, and again it probably could gradually fall back to this particular level, right? So right now TCS is also not looking that good, and now let's look at the weekly chart also. See, every time there is a fall, it had come close to the 20-week moving average and taken support in the last couple of months. But right now, no, that seems to be giving way. So that means the next is the 50-week moving average, which should be coming closer to this. It is coming closer to 32.23 or so. So I don't think so. I mean, like, it's my personal opinion, of course. So we should be holding on to this particular trend line. That this comes closer to 32.50, or in the next few weeks it could go up to 32.67, 32.68. So the worst thing is that if 34.20 is going to be broken, we should be holding towards 32.60, 32.70 levels. Now let's look at this is 4,000. It has come up to 4,000. So what are the important levels in terms of ratios? Now one is the 12%, that is 35.20. Now it is almost over there. So let's look at the 20%. Normally, because internationally this 20%, 23% approximately in that range is recognized as the definition between a bull market and a bear market. Okay. So now generally, but normally it doesn't apply much in stocks, but it applies more towards indices, right? So now in all these corrections also, of course, except during the pandemic time, So this is the correction which came from 3339 to 2880. So 3339 minus 2880 divided by 3339, it was a 13%. So that is what we are talking about, this 12-13% correction. Now this time I think the 12%, 480, 500 rupees, 3500, I think it is now slowly giving way to that. No? So I think probably we have to look at slightly deeper correction. So if that be the case, then we should still hold on to the 20%, approximately 20% correction, which means 800 points, which is 3200. So the worst is that for TCS could be 3220, 3230 levels. But 3420 itself can probably give you a good support, which is this particular high. So we should be looking towards 3420 as a first important support, failing which it's going to be 32, 60, 70 levels. And those two levels are the levels which is going to dictate whether we should be on the long side. Because if you're long on the side between 3400 and 3200, then once it starts to rally above the 4000, you'll have the 20% return fast. Okay, so this is as far as TCS is concerned. Now let's look at recently the stocks which are flaring and look at Tata Steel. So Tata Steel, that day we said very clearly that after it went up to the 50 moving average, it started to fall. So anything below this, you please come out of it. That's what we said. 1357. We said no. We went long about this particular high. Okay, about 1296, and probably you could come out below 1357. So I think Tata Steel, it seems to be in a mode of consolidation, and it looks that there is a top somewhere here. Okay, so now the correction probably can go back to the same place. This is 1232. So there's a chance that it could probably settle down closer to 1232, and we have to see how it fares closer to 1232. Now we have seen this correction which is coming from 1500 levels to 1232, right? Which means it is around 250 points, and 250 points from 1500 represents 17% correction. So there's a good amount of correction that has come in terms of Tata Steel. Normally it can come closer to 20-23%, but it has now come and it is now taking support at this important support turn resistance level. See, this closes 1233, and that is what is happening here, 1233, 1253. So this is going to be a very important level to watch, and if there is a further break of this, then probably we should be heading towards a much lower level as far as Tata Steel is concerned. Then in that case, we need not hold on to the stock for a long time. Now, then in that case, then we will get into this 20 moving average, and if this is going to be broken, I think probably we'll be heading much towards the 50 moving average also, which is closer to the 992 or 1000. So we need to be careful on commodity stocks. So stop loss is a must. And here, if you see on a weekly take, it has closed below. See, this week it has closed below this week. It has closed very clearly below this week, and we are in a downtrend as far as weekly chart is concerned. How is a downtrend? This is a top and this is a lower top. Okay, and another lower top is formed. This is a lower bottom. This is a lower bottom. Very clear case of Tata Steel in a weekly time frame is in a downtrend. In a daily time frame also it is now getting into a downtrend, and in a monthly, of course, it is on the upside. Now, if you look at it, it is on the monthly side. It is still on the up, but probably any fall which is below this, probably will create a situation where we are going to go at a lower bottom and lower top. So this is going to be a very important picture. This 1232 is going to be a very defining thing for Tata Steel, which probably then could drag it down to some of the Fibonacci ratios if we draw from the lowest level, because it's a parabolic rise that we have seen. So there is always a chance of a bigger correction coming. So very careful. Now this is Tata Steel. So it held on first to the 23.6% retracement. This is 1228, 1230. Now if this is going to fall, then probably we will be heading towards the 1050 marks, 1040, 1050, and then probably to a much lower level. So 1040 is going to be a possibility in case if 1228 is going to be broken. And even buying closer to 1038 is still not recommended, because Tata Steel and all, if there is some change in the commodity cycle, it can eventually go down, because if there is going to be an increase in interest rates globally, then commodity stocks can suffer, and probably we could even head towards much lower. So don't take the chance as far as investment in Tata Steel is concerned till such time it stabilizes. You can look at the investment in terms of TCS, you can look at Reliance, but Tata Steel even at 1035 is not still an investable share price at that level because of the commodity cycle, nature of the commodity cycle. So now let's look at Tata Motors. This stock this month is a star performer. It just went zoomed closer to the 490 levels, and if you see the correction that happened previously also, it went from 360 to 268. Okay, so 360 to 268 is approximately a 90 point move, and divided by 360 it comes to 25%. So I said it's 23% or so. So this is a normal correction which happens above this 23-25% correction normally happens in stocks before it starts to rally. So if you go by the same logic, then probably 528, and so 528 into 0.75, there's a bigger correction. It could play right up to 396 levels. So so we could probably see some sort of thing here. But I think we will have supports first of all at the resistance term support at 468. A fall below 468 is very much required right now. The correction is holding here, so 468 is one support, and below 468 probably we could probably head towards this is 420. So 420 to 400 is a very highly likely chance for Tata Motors. So Tata Motors is a stock to be bought, but probably based on the trend. But we need to wait because this is too much of a there's a very big gap, and after the gap, if you see, it is not sustaining. So it just went zoomed and just without giving any opportunity, just went there. So this is a gap. So this gap is likely to get filled, and if this is going to be filled, then probably this could head straight away to 435 and probably a little lower. So beware of Tata Motors. Again, if you look at the daily trend. See, this is one close which is lower than the previous close, right? So this is a pivot close, lower close, and this is another lower close. Now, if it is going to go below this day, yesterday, then in that case we will have a confirmation of a lower top also, which means Tata Motors on a daily chart is a sell below 485. It's a sell below 485 and a stop loss above 510. So the ideal thing is be careful about Tata Motors also. If you want to take profit, better take profit below 485. Don't wait much. Then probably they can get a slip below 420, from where you can make a decision for investment. So Tata Motors on the daily chart, on the trend identification, you need to be careful below 485, which will confirm lower bottoms and lower tops, because the moving averages are very far off right now, right? So we can't use the moving averages for the time being. Even a 20 moving average is coming at 403. A 50 moving average is coming to 339. So in those particular cases where you can't use this, we have to use only the bar chart to help us. So your simple bar chart itself will give you a big picture. But in order to make an assessment to what extent it can come down, go up, moving average and Fibonacci ratios will be quite helpful, and the ratios also will be quite helpful. So this is as far as the Tata Motors is concerned. We will look at Maruti now. So Maruti, this is a daily chart, and this is see, this is one top and this is one top. So this is a lower top right now. So it has gone below this. So which means some traders will say that let me not wait for a lower bottoms and all. So I have got a lower top here itself, which is a break of 7585. So I am short below 7585. So they can be now in the short selling of Tata in Maruti. So Maruti, but of course it has now come below the 20-day average. So there is a chance that it can also go down up to 50-day moving average, which is coming closer to 70, 78. So right now, if the stock slightly goes up and starts coming down below this particular low, it will confirm that the stock is in a bigger downtrend, and there is a chance that it can probably head towards the 70, 78 to 70, 80 levels. So this is the formation where probably you need to be careful and look towards only on correction basis to buy Maruti also, if at all you want to buy, because this is one of the laggards. I think in the entire bull market, this has not participated much. So right now, with so much of competition, with the changing landscape of automobile industry, you also need to be careful about investment in stocks like Maruti. Okay, so you need to wait patiently for the market for it to come down significantly before you go for a position there. So we look at ICICI and HDFC Bank. ICICI has done well, and now if you see, we recommended this stock above this particular high itself, and now there is no formation right now to suggest we should be getting out, but you have to keep some sort of a stop loss. And if you want to keep a stop loss right now, I think one thing is that you can keep a stop loss below 735, 736, 735, 736. But if you want to really get yourself at the top and come out, then in that case, see, this has broken this particular high. The high has been broken. This high has been broken. So if it starts coming below this bar's low itself, see, because this if you take this as a breakout bar, you have to take this as a breakout bar. And if the breakout bar is not sustained the next day, okay, and it starts coming below that low, then in case the reversal would have started. So ICICI itself, I would say, no, you need to be, you need to think about whether you should be at 753, because see, I will give you the illustration here. Now this is the clear case where this bar is broken. Okay, this was broken by this day, on this day. Okay, so this particular day, either this day or the next day, okay, this becomes a stop loss, because this is a reversal day. This is a reversal day, because the reversal day means you have a this low, this close is below the open. Close is below the open, right? So if you see, there is a close which is below the open, and you also have a close which is lower than the previous day close. This close is lower than the previous day close, but open was much higher, and it went up. So, and then it fell down. So that means there's a good amount of resistance that has come. So if you put the candlestick chart, you will be able to appreciate a little more, because you can see that it went up, then it formed a black bar, a bearish bar, and with this formation, it showed very clearly that you cannot keep the stock below this low. Okay, so here itself the correction had started. From this low itself the correction has started, and probably this high is a very important high. So this high has become the most important high for that. So we should look at the patterns also sometimes. And if you look at this patterns, this also is a good pattern. This took support here at 50 moving average, and then it went above the high. Okay, and then when it fell also, it just fell a little marginally, but started to take support above this. So we need to be very careful in stocks while putting stop losses, because the stop losses should not be frequently used or misused. So we must know where exactly we should put a stop loss, for which you need to look at the some sort of a comfort. That is, we should have a clear pivot point low broken below the 50 moving average. If that is the case, you should completely exit. Now here it is a case. This is a 50 moving average, and if this low is broken, then we should have come out of this. So right now, if at all there is any correction, we should have some pivot low formation which is below 710, 711, and then you can look towards coming out. So that's one thing we should keep in mind. And another thing is, if you look at it, see from this point, ICICI rallied here. So let's look at another place from where the previous important low. This was another low, because it came between 20 and 50 moving average. So let's draw the Fibonacci from this level, and also draw the Fibonacci from this. So let me draw from this level first, because this is another important low. Okay, now I will extend this to show why you should have been a little bit patient here. Now I've drawn thick lines here. See, from this place when I drew the Fibonacci, now you can just see there was one support here. Okay, this place. Okay, then so what we are looking at, some place which is since there is a top which is just gone above this top. There's one top. Since there's one top which has gone above this top, so we would prefer to wait till one bottom above this. So here it was a support point. So at this support point, when it starts to move up, then we should be looking towards going on the long side. Now the same logic if we apply here, okay, the same logic if we apply here, let's look at the we'll cut this out. Okay, so here if you look at it, see, we have got this point being broken very clearly. So that means we are going to use this as an important bottom. There's no doubt we are going to use this as an important bottom. So what are the important support levels? The first support level is this. Okay. Second support level is going to come here. Okay, at 716. The third support level is here. Only below this we are going to get out of it. So the third support level has come to 702. So there is a chance that the ICICI can drop even up to 702 and go up. But before that, there will be some support closer to the 737 and then probably towards the 718 and then towards 703. So what you should do ideally is wait for ICICI to drop closer to 718 to 720 and apply a stop loss below 700. Okay, apply a stop loss below 700. So 780, 720 is a place where probably ICICI should be bought, and this is a place where probably you can look towards getting out, because from the formations here it is not looking good. This formation probably looks like struggling. So if it starts moving below this day's low, which is 753, you can come out and look towards 720 levels to 703 levels. And since it has gone up to 765, there is a chance that probably if it comes to I talked about 5% because normally these stocks are now correcting only 5%. It comes to 722. So very high good chance that it can come closer to 720 levels, because a 5% correction itself will bring it only to 720. So in stocks, do not invest without at least a 5% correction first, but it can be much steeper and nasty. So the investment should come, I think, after a deeper correction, which could be even 10 to 12% minimum, and then probably towards a 23-25%. So now this is the ICICI. So we will just look at HDFC and then wind up. HDFC Bank. HDFC Bank now, okay, a little bit of a struggle now, and if it starts to go below this today's low, then in that case we can probably look towards confirmation of a lower top. So you don't need to wait for anything else. So anything below 1671, I think HDFC profit booking should be there for the time being. Profit booking should be there, and then we can wait a little patiently, because normally it comes between 20 and 50 moving average. So we could probably head towards if it can head even probably towards this particular level, which is the 1598 or 1600. So normally these stocks don't correct much, so it corrects by 5%, 6% and all, and so even a deeper correction is around 10-12%. So if you look at this correction, which is the 1641, and this is the one which is 1353. So it is around 300 rupees, which is approximately at 20% here. Even in HDFC, on one point of time it had something like closer to 20%. So we are not looking at something like a 20% fall right now, but right now probably we can still expect something like 5%, 10% fall and all. HDFC Bank normally does not go for a 20% correction and all much. So this 1725, 20% means 340 rupees. So we can put a floor there, minus 340. So it should be above 1385 or 1400. And this is, I don't think so this is going to go to that extent. We may take a support either at this level, which is the 1640, or worse could be something like a 1545. So there could be some correction of a 10%, which could take it closer to even to the 1580 levels, which is the 50 moving average. But right now, the important thing is that it is forming a lower, if this is going to be cut, it is a formation of a lower top, which means it's time for you to exit and plan your investment a little later. Okay. So this is how you make an analysis of the stock trading or investment based on moving average, based on the bar chart, also based on Fibonacci and some ratios. Okay. So thanks for your participation. So if you have any questions, you may ask me now. Only through constant practice, by constantly engaging ourselves with the market, we will come to know of how to, what are the levels for investment or for trading. Then, of course, the other part of it, money management and psychology, takes over. Thanks for your participation. Hope to see you again next weekend with new topic. Thank you very much. Good night. Stay safe.